So yeah, beacon lighting is one of the three key picks that we have in retail. So it's quite pleasing that they came out with an investor presentation yesterday looking at their international aspirations, because nobody talks about this. But as I say on the slide, we are excited. I'm easily excited, but this one's got me particularly hot under the collar. The reason being is that international sales are currently a pretty small part of what Beacon does. It's only 4% of their revenue. And yet it's been growing at quite some pace behind the scenes. So around about a 31% CAGR over the past 5 years off a low base. But so far this year, it's really opened up the floodgates. What they've done is they've launched a new direct-to-consumer website in the US, beaconlighting.us, which focuses on ceiling fans. And this has caused them to see 77% growth in Q1 year on year in sales into the US. What they've also done, and they announced this yesterday, is they've created a new store that is focused on the domestic Chinese opportunity, which obviously, as you can imagine, is potentially huge. They have big operations in Hong Kong, but this is the first time that they've really pushed into domestic China, or at least tried to. But I think it's the US market which really gets me excited, because this is a huge market. If you just look at the ceiling fan market, it's a $2 billion market US. Which is more than 10 times the size of Australia, and it's expected to grow quite strongly. Now, this is where Beacon has a huge opportunity, because they have a premium product, which is, generally speaking, more expensive than what you find in the US. In the US, these things tend to be quite commoditized. If you've seen a Beacon lighting store recently, you'll have seen things like the Fan Away, which is a very attractive fan if you're into that sort of thing. Where the blades retract into the light fitting. These things are not really a big deal yet in the US, and yet with the launch of the website, they've clearly shown that there is a market for it. They were also, and this is possibly even more intriguing, they were talking about the size of the US lighting market. Now, remember when Glenn came in last time, he was saying, look, we're not going after the US lighting market, we're going after the ceiling fan market. Well, actually, it looks as if they are going after the lighting market. Now, this is a huge market, $42 billion, and it's really, really fragmented. The largest player, the largest specialist lighting provider in the US is called Lamps Plus, and that does revenue of about the same amount as Beacon in a much, much bigger market. So you can see how fragmented it is, and you can see where the opportunity lies. So, as I say here, the strategy isn't complicated. In fact, it's breathtaking in its simplicity. Take the products we've designed in Australia and sell them somewhere else. And so with a platform like that, you've got to back these guys. They have come out and they've signed up some of the largest e-commerce providers in the world. Amazon is a big customer of theirs, as is Home Depot, Wayfair in the US. They're selling into the big box format in the US as well. And possibly most tantalizing of all, one of the slides that they had yesterday was a description of their various sales channels. And next to the row that said physical stores, there was question mark, question mark, question mark. You wouldn't put that up there unless you were seriously considering having a physical presence in the US. Now, could they do that organically? Yes, but it would take them some time. So what this says to me, and the company would never say this, is that there's potential for M&A here. The company has a pretty strong balance sheet. If you exclude the leases, about $20 million of net cash. They could buy something of up to about $300 million and still keep their gearing under 2.5 times. So there is the potential here to dip their toe in the M&A waters of the US, which I think will really get this one going. Because Beacon is trading, it's priced as if this is a domestic cyclical. People are very interested in where the housing cycle is in Australia. Well, what if that's not the point? What if the point is that there is a lot of growth potential in what they're doing with trade? You've heard them say before, you've heard me say before, that they want trade to be worth 50% of their domestic sales base within 3 to 5 years. If they do that, that's not in my numbers. What if international were to continue to grow at 50, 60, 70% a year for the next few years? That's not in my numbers either. If they were, you get a revenue curve like the one I've shown on the slide here. The dotted line is Mr. Conservative's numbers here on the left. But we could be looking at 30% higher earnings within 5 years if they do those simple things. And that's organic. there's M&A, of course, that goes still higher. So Beacon, as I said, it's one of our 3 key picks in retail, has been for a little while. This shows me that the company is anything but X growth. It trades as if it is, less than 8 times EV/EBITDA. I think with a strong balance sheet and ambitions like this, you should be having a look at it.